Hey everybody, my name is Brian Winrow. I'm a tax attorney and tax professor, and this is part of my series of the 1040 line by line. So what we're going to do today is we're working on line number 6, which is going to be our Social Security. It's one of those areas that causes so much confusion. So because it's causing so much confusion, you're going to notice I put this into 2 separate videos. The first video is going to be talking about the kind of the why and where it's coming from, the why and the where process, and then the second video is going to be the how. So we're going to go through and actually use the worksheet and see how it's going to be computed in the second video. But this first video is important because we need to know where those numbers are coming from. You see, we're going to look at the format of the 1040, and we're going to see that 6A comes before several of the other lines that we're going to be using. So we're not just going in sequential order saying, okay, now anything that happened before line 6 is going to be included in our provisional income. No, we have to also worry about things that come from like Schedule C. So what I'm going to do then is I'm going to go ahead and I'm going to show you how our 1040 is set up and where the numbers are coming from, so that way we can get acquainted with the 1040 and prepare to get into line 6. Okay, so what we're looking at here is our 1040 table, and what we're doing is we're looking at the different lines that have an impact on our total income. Now we're going to use this total income as part of our computation to get to provisional income, which we'll work on here in a little bit. But first, let's look at the things that we need. First is wages. So we've already done a video. It's already been posted on our wages. So if you've been following through those, you know the different types of wages, whether it's going to be your W-2 wages or wages from like unreported tip income, things like that. All right, so then you have lines 2 and 3, interest and dividends. Now, again, there's been a full video that I've already posted on that one. Remember, with line 2A, what you're dealing with is tax-exempt interest. And then you have line 2B, which is going to be your other taxable interest. And then you have dividends. And under dividends, you have line 3A, which is going to be our qualified dividends. And you have line 3B, which is going to be ordinary dividends. Well, all dividends are still going to be taxed, so it's all going to be included. We go over to lines 4 and 5. On line number 4, we're dealing with our IRAs. So on 4A, what we're dealing with is the entire amount of the distribution or from the transaction. But 4B is the only portion that's going to be taxable, because like if you have a Roth IRA, it may not be taxable, or if you do a rollover, it may not be taxable. So we don't care about 4A for this. We're caring about 4B. Same thing when we're dealing with pensions and annuities. The 5A is going to be our total distribution, but 5B is going to be the taxable portion. So we're only worried about 4B and 5B. Then we get to 6, and that's our current line that we're working on. So that's where we're at right now. But you can see we still have to deal with capital gains and Schedule 1 income, which also brings in Schedule C, before we get to total income. So when you're looking at the 1040 and you say, okay, there's lines 1 through 5, that must be what I'm using for 6, sort of, but we still have things that happen after it, 7 and 8, that we need to include in order to figure out what our provisional income is eventually going to be, so we know what percentage of line 6 is going to be taxed. You see, because line 6 is set up to where you have 6A, and in 6A, what happens is that's the total amount of your Social Security. But your Social Security is never going to be taxed at 100%. It might be 0, it might be 50, it might be 85%, but it's not going to be 100%. The taxable amount is going to go in line 6B. And 6B is the amount that we're going to be adding to get to our total income. Okay, so again, we're only using a portion of line 6. But this is where we're at right now, and we'll continue to work through this process. But we're using wages, and then lines 2B, 3B, 4B, 5B, and then we'll calculate 6B for this purpose, and then we'll be using capital gains, and then our Schedule 1 as well, which will go to line number 8 on our return. All right, well, let's go take a look at lines 6A and 6B on the 1040 so we can see how it is set up. All right, so this is what it looks like when we're looking at our 1040. This is just a snippet of the 1040 that's showing us lines 6A and 6B. So when we see 6A, what we're going to do is we're going to go to our SSA 1099, which you received. Your SSA 1099 is going to give you the amount that you're going to then put on 6A. Okay, that's the total amount that you received in your Social Security. Now, it doesn't mean that it's all taxable. That's just the amount that you received. Then what we have to do is we have to determine the total amount that's going to be added. So the total amount that's going to be included to be taxed. So we can't do that until we complete the worksheet. So the amount in 6B will be a subset of the amount that was included in 6A. So 6A is going to be a larger amount than what we have in 6B. Now in the next video, we're going to work through the 6B portion of it so we can see how we determine what amount's going to actually be taxed there. But right now what we're doing is just going through the why and the format of it, not the how quite yet. Okay, well, let's go on and let's take another look at another table. All right, so what we're looking at now is how the different types of income and the lines impact our 6B, the Social Security taxable portion of it. So the first thing we're looking at were our wages. So we knew we already included our wages. And then we got over to our interest and dividends. Now remember, when we were on interest, line 2, we have 2A and 2B. We said 2A is going to be our tax-exempt interest from municipal bonds, for example. And then we had line 2B, which is the taxable portion of our interest. Well, we're going to be including 2B, and same thing for 3B, right? So in 3A, we had the qualified dividends, which are going to be taxed at a different tax rate, but 3B included all of our dividends. So we're using 3B, the entire amount of our dividends. Retirement income. Remember in 4A, that's the one where we're saying it's not taxable. 4B is the one that we're saying that portion is taxable. We include 4B. Same thing with line 5 when we're getting to pensions and annuities. We include 5B. Now we're dealing with 6 here on this video, so I did not include 6 on this table because we're trying to figure out what the impact is on line 6B. And then we go to capital gains, line 7, Schedule 1 income, line 8, and then we add back our tax-exempt interest in line 2A. Now, when we're adding back tax-exempt interest, it doesn't mean we're going to be directly paying taxes on our tax-exempt interest. What it does mean, though, is we increase it or we add it back because we have to figure out our provisional income that we're going to be using in order to determine what percentage of our Social Security, if any, is going to be taxed. All right, the other thing I wanted to point out is Schedule 1. So notice we're dealing with line 6, but we've also dealt with line 7 and 8, even though we haven't followed it in order yet. That's still included to determine how much of line 6 is going to be taxed. So when we look at Schedule 1, that's going to include our Schedule C. So I'm going to take a brief look at Schedule C. We're going to have a full video that deals with Schedule C. So that's not something we're going to spend a lot of detail on, but I just want to quickly show you the flow of Schedule C. All right, so now we're looking at the Schedule C table. And what you're going to see on the Schedule C table is that we initially use the Schedule C in order to come up with our net profit. But once we use Schedule C, that flows on over to Schedule 1. Now, I'll be doing a full video on Schedule C. I don't want to get into the details or the weeds on that, but we will be doing that when we get into that video. So then we go to Schedule 1. We've already done a full video on Schedule 1, but we know we take the amount from Schedule 1, and now that's going to be other income, right? So we're going to take that Schedule 1 and we're going to bring it over to line number 8. So now we have our line number 8 that we were using before when we were looking at the previous table. So once we have line number 8, now we're able to calculate our total income, and then that's going to help us get over to our line number 11, our AGI. Now, we don't just stop at AGI. Remember, we're still trying to get to provisional income. We still need to worry about things like the tax-exempt interest, and we even have part of our Social Security that has to be added in there. So let's go ahead and figure out how we get to provisional income from here. Now, after we talk about provisional income, what will happen is I'll wrap this video up, and then we're going to jump over to a brand new video, and we're going to go and actually work through this so you can see the math behind everything so you know how it works. So if you need to know the math, I mean, maybe your program's doing all the calculations for you, so this is helpful in determining the theoretical portion of it. But if you want to see how to do the math, that's the next video for you. So let's go ahead and take a look at provisional income. All right, we're almost here, everybody. So what we're doing now is we're going to figure out what our provisional income is so we can determine our Social Security portion of it. So we have to start out with AGI before or excluding Social Security. We don't want to have Social Security included in that. So we're going to take our total income, which is what we calculated, or which is what we looked at last time on the previous table. So that included our line 8, right? So we went through Schedule C and went to Schedule 1 over to line number 8. And then we go over, and then we came over to total income. And now what we have to do to get to AGI is we have to subtract out our above the line deductions that are formerly known as our adjustments. So we take out those adjustments, that gets us to AGI. Now what we're going to do is we're going to take back our line 2A, we're going to add in our tax exempt interest. You see, we didn't include tax exempt interest when you're getting total income because we don't want to pay taxes on it. But to get to provisional income, we do, because that's going to impact what we're going to be paying in taxes on our Social Security. So we add back line 2A, which is our tax exempt interest. And then what we do is we go over and we say, okay, line 6A, our total Social Security benefit. Well, now what we have to do is we have to add half of that back in for purposes of determining our provisional income. At that point, once we do all of this, we can now look at the tables and figure out, okay, what percentage are we going to be taxed at? I'm not going to go into the worksheet now, but what I will do is I'll wrap up here, and I'm going to let you know that on our next video, we're going to go ahead and we're going to actually work through some numbers on that so you can see where everything's coming from and make sure you're comfortable with that. All right, subscribe to my channel to keep up with these tax updates.